Most people were watching the stock market, some were watching the price of Bitcoin, but on February 14th, 2025, a silent alarm triggered in the global financial system that almost nobody heard, until it was too late. On that morning, 4 major banks in South Korea, institutions with virtually unlimited capital, did something they are never supposed to do. They didn't just raise the price of silver, they didn't just increase the premiums, they stopped selling it, not for a day, not for maintenance, indefinitely. If you walked into a branch in Seoul with a stack of cash, begging to exchange your paper currency for physical metal, you were turned away. The window was closed. This wasn't an isolated glitch, it was a signal. Because while the media was distracting the public with inflation numbers and political theater, the smart money was quietly looking at a different set of data. And what they saw was terrifying. In just 47 days leading up to that moment, 37.6 million ounces of silver had vanished from Comex vaults. It was the largest drain since 1980. On November 17th alone, a staggering 6.13 million ounces were withdrawn in a single 24-hour period. This is not normal market behavior. This is a bank run. Welcome to Empire Economics. If you're currently looking at the price of silver to decide if you should buy, you're making a fatal mistake. You're looking at the wrong number. The spot price of silver is a number generated by trading paper contracts, promises between banks that effectively don't exist in the real world. But the physical market, the actual bars and coins that protect wealth during a collapse, is screaming something entirely different. We are witnessing a phenomenon called backwardation. In plain English, this means the spot price is higher than the futures price. People are so desperate to get their hands on metal today that they are willing to pay a premium over a promise of metal tomorrow. Why? Because they know what is coming. Look at London. The London vaults, the heart of the global trading system, held 31,000 metric tons of silver in June 2022. By March 2025, that number had collapsed to 22,000 tons. Look at China. While their citizens are being restricted from buying precious metals, the state itself is hoarding. They have restricted exports and raised risk classifications. Do you see the pattern? The architects of the financial system, the central banks, the sovereign wealth funds, the industrial giants, are quietly removing the physical inventory from the board. They are preparing for a reset. And the first rule of a currency reset is this: you close the exit doors before you burn the building. They are locking you out. This isn't random chaos. We have analyzed 3 centuries of financial history, and this specific sequence of events has happened before. It follows a precise mechanical structure. We call it the 4-stage breakdown. And right now, according to every available data point, from the Comex drainage to the industrial deficit, we have just exited stage 2, and we are deep into the danger zone of stage 3. In this video, I'm going to show you exactly how this mechanism works. I'm going to show you why the solar panic is making this time mathematically worse than 1980. And most importantly, I will show you what happens in stage 4, the moment the price becomes irrelevant, because you won't be able to buy an ounce of silver for any amount of paper money. The window is closing. Let's look at the data. To understand why the window is closing right now, you have to understand the mechanism that kept it open for so long. The scarcity we are seeing today isn't an accident. It is the mathematical consequence of a system designed to suppress reality. This brings us to stage 1, the paper trap. For thousands of years, silver was money. It was tangible, finite, and honest. But in 1971, when the gold window was closed and the world moved to a purely fiat standard, the architects of the financial system faced a problem. If the public realized that their paper dollars were being printed into infinity, they would rush into hard assets like gold and silver, causing the currency to collapse. So they created a diversion. They turned silver from money into a commodity. And they did this by creating the paper derivatives market. This is the engine of the trap. On exchanges like the Comex, Wall Street banks are allowed to sell contracts representing silver that they do not actually have. In the industry, this is known as naked shorting. The data on this is staggering. For every single ounce of physical silver sitting in a vault, there are often 100 to 500 paper claims trading on the market. Think about what that means. If you hold a silver certificate or shares in certain ETFs, you don't necessarily own metal. You own a promise. You own a claim on a bar of silver that 100 other people also think they own. For decades, this system worked perfectly for the banks. By flooding the market with unlimited paper silver, they could artificially increase the supply and suppress the price. It created the illusion that silver was abundant, keeping the price low even as the government printed trillions of dollars. But every Ponzi scheme has a mathematical limit. You can print infinite paper, but you cannot print a chemical element. This leads us to stage 2, the Great Drain. Stage 2 begins when the smart money, the insiders, the sovereign funds, and the astute investors realize that the paper price is a lie. They stop playing the casino game of futures contracts, and they start demanding the physical metal. We have seen this happen before. In our previous coverage of 1980, we discussed the Hunt brothers. Everyone remembers them as the villains who tried to corner the market. But if you look at the data, the Hunt brothers were simply the first ones to call the bluff. In 1979, they looked at the inflation rate, they looked at the printing of the US dollar, and they realized the price of silver was artificially low, so they bought. But they didn't just buy futures contracts, they took delivery. They loaded planes with physical bars and flew them to Switzerland. That was the moment the system panicked. The price didn't just go up, it exploded from $6 to nearly $50 in barely a year, a 724% increase. Why? Because the moment someone demands the actual metal, the illusion of infinite paper supply evaporates. The Hunt brothers were stopped because the exchange changed the rules. They raised margin requirements and banned buy orders. But the lesson remained. When the physical drain begins, the price correction is violent. And that is exactly what is happening again in 2025, but on a scale that makes 1980 look like a rehearsal. While the retail public is being told that the economy is strong, the corporate insiders are exiting. We are seeing record levels of insider selling across the S&P 500. CEOs like Jeff Bezos and Mark Zuckerberg have liquidated billions in stock. Warren Buffett is sitting on a record $325 billion cash pile. Where's that capital going? A significant portion is moving into hard assets. The drain is visible in the inventory reports we showed you earlier. The vaults are bleeding. The registered category at the Comex, which is the silver actually available for delivery, has plummeted to dangerous lows. In 1980, it was just two brothers from Texas draining the supply. Today, it is the solar industry, the military-industrial complex, and sovereign nations like China and India. The drain is systemic. The paper market is leveraged hundreds to one, and the physical collateral backing that leverage is being removed from the vault every single day. Stage 2 is the quiet accumulation before the storm. It is the sound of the smart money rushing to the lifeboats, while the band is still playing on the deck. But stage 2 is over. The inventories are now so critically low that the banks can no longer hide the shortage. The paper trap is failing, and that forces the system into stage 3. When the drain from stage 2 reaches critical mass, the system breaks. This is stage 3, the crisis. And make no mistake, we're living in stage 3 right now. Stage 3 is defined by a specific phenomenon that terrifyingly few investors understand. It is called the decoupling. It's the moment where the paper price on your screen and the physical price on the street stop telling the same story. In a healthy market, the future price of a commodity should be higher than the spot price because you have to pay for storage and insurance. But right now, we are seeing the opposite. We are seeing backwardation. Major industrial buyers are bypassing the futures market entirely. They aren't waiting for delivery next month. They are paying massive premiums to secure metal today. Why? Because they know that next month the metal might not be there. The banks in South Korea didn't stop selling silver because they hate profit. They stopped selling because they cannot source the physical bars to replenish their vaults. The supply chain has snapped. And here is the terrifying realization that separates 2025 from 1980 or 2011. This isn't just a financial squeeze. It is a geological emergency. This brings us to the solar singularity. In 1980, silver was primarily used for photography and jewelry. If the price got too high, people just took fewer photos or bought less jewelry. Demand was elastic. Today, silver is the lifeblood of the modern world. It is the single most conductive element on the periodic table. You cannot have an electric vehicle without silver. You cannot have a 5G tower without silver. You cannot have an AI data center without silver. And most critically, you cannot have the green energy transition without silver. The data is undeniable. The solar industry alone is now consuming over 12% of the entire annual global supply. And that number is compounding. A study by the University of New South Wales projects that by 2050, the solar industry could demand over 85% of the world's known silver reserves. Think about the math of that. We are mining less silver every year. Ore grades are declining. The easy silver has already been dug up. And at the exact same moment supply is falling, we have built a global civilization that requires exponential amounts of it just to keep the lights on. This is why the lockdown is happening. The architects know that silver is a strategic military asset. It is found in Tomahawk missiles and fighter jets. Do you really think the US government or the Chinese Communist Party is going to let retail investors hoard a metal that is essential for national defense? In stage 3, silver stops being a trade and starts being a matter of national security. The deficit in 2024 was 148.9 million ounces. That is the fourth straight year of a structural deficit. This silver didn't exist. It had to be drained from the above-ground stockpiles. We are burning the furniture to heat the house. And now the stockpiles are effectively gone. The London vaults are empty. The Comex is registered at record lows. There is no buffer left. This is why you are seeing limits on sales. This is why premiums are exploding. The banks are trying to ration what is left before the panic spreads to the general public. They are trying to keep the price suppressed on paper while they frantically secure physical supply behind the scenes. But they can't hold back the tide forever. Physics doesn't care about the Comex. Physics doesn't care about naked shorts. When the last bar leaves the vault, the paper market goes to zero, and the physical market goes to infinity. That is the event horizon. That is stage 4. And this leads us to the final destination. The moment every empire in history eventually faces. Stage 4. The break. Stage 4 is not a bull market. It is not a rally. It is a market failure. It is the moment when the paper price becomes meaningless because there is no physical metal available to back it up. We saw a preview of this in March 2020. We saw a preview in 1980. But the next stage 4 will be different because of who is buying. In the past, it was just investors. In stage 4 of 2025, it will be industry. Imagine a scenario where Apple, Tesla, or Samsung cannot source the silver they need to manufacture their products. Do you think they care if the Comex price is $30 or $50? No, they will pay $100, $200, or $500 an ounce directly to the miners just to keep their assembly lines moving. At that moment, the spot price you see on TV becomes a ghost. It becomes a fictional number that you can look at, but you cannot trade. If you try to buy silver at the paper price, the dealer will simply tell you, no stock. If you try to cash out your ETF, you will receive a check in depreciating fiat currency, not the metal you thought you owned. This is the unavailability event. It is the moment when the two markets, paper and physical, permanently divorce. The paper market will likely be frozen, suspended by regulators to protect the system, just like they did with the Hunt brothers. But the physical market will go dark. It will move into the private sphere, trading at massive premiums that effectively revalue the metal to its true worth, a worth based on scarcity, not manipulation. We are standing on the edge of this precipice right now. The South Korean banks stopping sales was not a glitch. It was the first domino. The drainage of the London vaults was not a coincidence. It was a preparation. The architects of the system have designed a trap. They have kept the price low to discourage you from owning it, while they quietly drained the world's supply to secure their own power. They are betting that you will stay distracted by the stock market casino until the vault door is fully shut. But now you have seen the data. You have seen the 4-stage pattern. You know that the silver lockdown is not a conspiracy theory. It is a mathematical certainty driven by a geological deficit that cannot be fixed by printing money. So you have a choice to make. You can continue to play their game. You can hold paper promises, digital digits, and contracts that depend on the honesty of a bankrupt system. You can wait for the government to tell you that everything is fine, right up until the moment they announce a temporary suspension of your ability to trade. Or you can act. You can do what the smart money is doing. You can do what the central banks are doing. You can trade your paper for the only asset that has survived the collapse of every empire for 5,000 years. The window is closing. The banks have already started banning sales. The premiums are rising. The inventory is vanishing. History shows that when stage 4 hits, it happens overnight. You go to sleep in a world where silver is available, and you wake up in a world where it is unobtainium. Don't wait until you are locked out. Secure your position. Take possession of what is yours. Because in the end, if you don't hold it, you don't own it. This is Empire Economics. We'll see you in the next video.